Hello everyone. In our last lesson for class 12 accountancy, we have studied about the books of accounts for a not-for-profit organization. We have studied about the adjustments for certain terms, how to record the certain terms from the receipt payments accounts, and what will be their difference in recording in the certain terms while preparing the income and expenditure account. In today's video, we will learn about how to prepare the income and expenditure account. That is the procedure of preparing income and expenditure account and the procedure of preparing balance sheet with the help of the adjustment of certain terms that we have discussed earlier. And we will try to follow a numerical and go through the solution of the numerical in a brief manner. So let's follow the video. In today's video, we will learn about preparation of income and expenditure account and how to prepare balance sheet after preparation of income and expenditure account from receipt and payment accounts as maintaining books of accounts for not-for-profit organization. For preparation of income and expenditure account from receipt and payments accounts, let's follow the procedure. First, we need to go through the receipts and payments accounts thoroughly. As closing balance of cash in hand or cash at bank and opening balance of cash in hand or cash at bank is not a source of income, they are not to be recorded in income and expenditure account. Now, only revenue receipt and revenue expenses are selected from receipt and payments accounts. Then we have to find the adjustment regarding revenue receipt item, if any, and only calculate the current year amount, deducting the amount related to previous year or next year and adding the amount not received for the current year. Now we will consider the revenue expenditure from the receipt and payment account and also find adjustment relating to the expenditure if any. Same procedure will be followed as that of the receipt calculation for the current year, and thus we will come to know about the amount of expenditure for the current year, deducting the amount related to the previous year or next year and adding the amount not made during the current year. Thus, if after recording each and every income in the income side of income expenditure account and the expenditure on the expenditure side of income and expenditure account, we will find the total. The total needs to be calculated separately for income, and for the expenditure total needs to be calculated separately. Now when the total of the income will be greater than that of the total of the expenditure, it will be a surplus, which is the general case. If in rare cases the total expenditure is greater than the total income, then it will be treated as deficit for an NPO. This is a rare case. Now see, we have only said about considering revenue receipt and revenue expenses from the receipt and payment account. Now we will consider whatever the capital amount of receipt and whatever the capital amount of payment, that, and then we will record it in balance sheet. Now, before preparing balance sheet, some other adjustments are also to be recorded in income and expenditure account. The first adjustment of recording in income and expenditure account should be depreciation on fixed asset. Now, explaining depreciation on fixed asset, it is a revenue expenditure, thus it will be recorded on the expenditure side of income and expenditure account. The next adjustment will be provision for bad debt. Definitely it will be a revenue in nature and thus it will also be recorded on the expenditure side of the income and expenditure account. Other than this, we may have profit on loss of fixed asset. Profit is a income, and if it is a loss, then definitely it will be a expense. Other adjustments can be amount of consumable food supplies. The amount that is to be consumed in the current year will be recorded on the formula based opening stock plus payments made during the current year minus closing stock, and the amount will be recorded in the expenditure side. So here we can follow the format of income and expenditure account. The debit side of the ledger account is treated as expenditure and the credit side of the ledger account is treated as income. In the expenditure side, all the revenue expenditures are recorded, and in the income side, all the revenue incomes are recorded. If there are any adjustments for the revenue expenses and revenue incomes, they are also adjusted in the same format for preparing income and expenditure account. Next, we have to prepare balance sheet, and let's follow the procedure. Before preparing balance sheet, first in working note we have to find out the opening capital fund of the balance sheet, and this can be calculated with the help of balance sheet at the end of previous year from the value of assets and liabilities given in the adjustment in the receipt and payment account related to the previous year. Definitely we will find that the asset side of the balance sheet at the end of previous year will have a greater value and the liability side will have a lesser value. Thus the difference amount is the capital fund. Now for preparation of current year balance sheet, we have already calculated the capital fund from the previous year closing balance sheet. With that we will add surplus, and finally we will calculate the closing capital. Next, from the receipt and payment account, all the capital receipts will be recorded as a liability and all the capital payments will be recorded as an asset. Outstanding liabilities, that is capitalized part of entrance fees, life membership fees, outstanding expenses, subscriptions received in advance at the closing date will be shown on the liability side, and outstanding assets such as prepaid expenses, outstanding subscription for current year, outstanding income, etc. will be recorded in the asset side with the closing cash and bank balance from the receipt and payment account. Next, for recording fixed asset, addition, that is purchase of fixed asset, then depreciation for fixed asset. Next, disposal or sale of fixed asset is to be adjusted in the same balance sheet, that is in the balance sheet at the end of the current year. Finally, we will find that the total of asset side and the total of the liability side is same, and the totality of preparation for income and expenditure account and preparation of balance sheet is achieved. Next, a numerical is given in form of receipt and payment account for the year ending 31st March 2007, and we have been asked to prepare income and expenditure account and balance sheet for the year ending 31st March 2007. So let's move on to the solution. For preparation of income and expenditure account, first of all we will maintain the format. At the top of the ledger account we will write in the books of and the name of the club. Here we have not written the name of the club. Then we will write income and expenditure account for the year ended and put the date, that is 31st March 2007. We will put debit on the debit side and credit on the credit side, and finally we will record the transaction. Starting with expenditure, at first we will record salary and wages, and the amount as given as per the question is 83,200. Next we have sundry expenses. Now the sundry expenses amount is 37,000. From that, outstanding expenses which is included in 37,000 for the year 2005 and 2006 has to be deducted. So the net amount we get is 34,200. Next we have to calculate the value consumed for stationery. See, in the payment side of the receipt and payment account, 16,000 is the amount. With that we will add the opening stock, that is 2005 and 2006 value 2,000. With addition of 16,000 we get the total as 18,000, and from this 18,000 the closing stock for 2006 and 2007 value being 3,600 will be deducted, and the net amount will be 14,400. that will be recorded as a expenditure. Now for rates, amount given in payment side is 24,000, and in adjustment it has been said that always each and every year there is a prepaid for 3 months. So the total annual charges for rates is 24,000. Out of that we will calculate the 3 months value, that is 24,000 into 3 by 12, we get 6,000. So the last year prepaid, that is 2005 and 2006, value being 6,000 will be added, and the current year prepaid, that is for 2006 and 2007, value being 6,000 will be deducted. Net value will realize the same amount, that is 24,000, recorded on the expenditure side. Next, moving to the refreshment expenses, direct value is given 37,500. Now one more thing need to be mentioned, that is why I have highlighted the portion. We can adjust this 37,500 with the income from the refreshment 48,000, so we can deduct it separately. Since the net value will result in income, it will be recorded in the income side, but separately we have shown this in the income side, that is revenue from refreshment as 48,000 and refreshment expenses 37,500 separately. You can do the net and show it in income and expenditure account as per your choice. Next, we have telephone charges as a expenditure, 4,000 being the amount. With that, adjustments given outstanding for the current year is 1,400, that will be added and shown in the expenditure side. Next, there is audit fees. No adjustments are given, so direct amount will be recorded as expenditure, rupees 6,000. See, where there are no adjustments, the direct amount is recorded as a income or the expenditure. So no further discussions will be made on the topics where adjustments are not given. Next, we have depreciation on building. The rate of depreciation is given 2.5%, and in the adjustments, value of building is given as 4 lakh. So on 4 lakh, 2.5% will be calculated, and final expenditure is 10,000. Next, coming towards the income side, the first item that we get is subscription. Now we will calculate subscription. In receipt and payment account, we find the amount received is 3,37,600, but in adjustment it is said that there are 1,800 members, annual subscriptions being 200. So we will multiply 1,800 into 200, and finally we will get 3,60,000. So the total amount received for subscription during the year 2006-2007 should be 3,60,000. But in the receipt and payment account, it has been said that only 3,37,600 has been received. So the outstanding amount or the due amount for receiving is 3,60,000 minus 3,60,000 minus 3,37,600, that is 22,400, and the final amount in the income side will appear as 3,60,000. There are no adjustments for entrance fees. Entrance fees, as said earlier, is a revenue income, will be recorded directly in the income side, 16,000. Next, income from investment, we have 56,000. But with this income, there is a outstanding or due income on investment for 1,500, that we have recorded separately. Next, we have locker rent, 58,000. Direct income will be recorded, and revenue from refreshment, direct income. Finally, we will see that the total of the income side is greater. The total is 5,39,500, and the total of the expenditure side is lower, and the net result will be treated as surplus, that is 3,24,800. Now, before preparing the balance sheet for the current year, we need to prepare balance sheet for the previous year as a working note. So as you will find that in the working note, we have said that building value given in the adjustments 4 lakh will appear as an asset, investment value 8 lakh will appear as an asset, stock of stationery, that is for 2005 and 2006 valued rupees 2,000 will appear as an asset, opening cash in hand appearing in the receipt payments 41,000 will come in the asset side. Outstanding subscription for 2005-2006 will be an asset, as the balance sheet is prepared on the date, that is on the year ending of the previous year, and prepaid rates will definitely be an asset. Now you see in the working note at the liability side, outstanding salary and wages is written 4,800. Now this outstanding salary was paid in 2006-2007, but it was to be paid in the year 2005 and 6. That is why it was due, and thus at the end of the year it will be treated as liability. Also in the adjustments, outstanding expenses for the year ending 31st March 2006 is given amounting to 2800. Both of the terms, outstanding sundry expenses and salary, will be a liability. Next, moving to the balance sheet for the current year, that is 31st/3/2007, we have in the asset side land 60,000, building 4 lakh, from which depreciation already recorded in income expenditure account, expenditure side, will be deducted 10,000, net amount 3,90,000. Next we have investment, and in the receipt and payment account we find that investment has been purchased, which is a capital expenditure, thus purchase will be added with 8 lakh, 2,50,000, and other than this, income from the investment is outstanding. This income from investment which is outstanding will also be added, and the net result will be 10,51,500. Now for the subscriptions we have asset, because subscriptions were outstanding for the year 2006 and 7 and for the year 2005 and 6. For the year 2006 and 7, 22,400, and for the year 2005 and 6 the amount is 800. Finally adding those we get 23,200. Next, in the income and expenditure account we have prepaid rates for 2006-7, that is 6,000. We also have closing stock of stationery 2006-7, that is 3,600, and closing cash in hand 53,300. Now the liability side. In liability side we have already calculated that the capital front from the working note or the previous year balance sheet, 12,49,400. With that surplus is added. The total of capital fund and surplus will result in 15,74,200. Now subscription received in advance for 2007, 2008, 12,000 is a liability, and outstanding telephone bill will also be a liability amounting to rupees 1,400. Finally, we will see that the current year balance sheet dated 31st March 2007, liability side and asset side will have the same value. The value will be 15,87,600.